Hello all, welcome back to 100x Commerce. So today we'll be discussing the most important and the most expected match the followings that will be definitely appearing for your upcoming exams, whether it's going to be your preparatory or whether it's going to be your final exam. So Sneha here, your commerce lecturer. So today let's see the match the following chapter wise from all the chapters. So here we don't have any stipulated chapters that is given for the preparation. So basically you have to get prepared from all the chapters because as we know in accounts, 1 marker questions are very less. Hardly 20 questions will be coming for 1 mark. So we cannot guess like from which chapter which kind of 1 marker questions will be asked. Yeah, but never mind. So these are going to be the very important match the following. So let's not get delay for the day and get started. So you can take a screenshot of it or you can make a note of it at the end of the video. Yes, so Partnership Act. So when was the Partnership Act passed? It was passed in the year 1932. Partnership deed. So partnership deed can be both oral or written. Next, interest on drawings. So average period method is one of the important method that is used to calculate the interest on drawings. Here also example might be changed. Average period badli nimge product method kodbodu, direct method kodbodu, confuse agak hogbedi. Next, fixed capital method. So in fixed capital method we are going to prepare what? We are going to prepare 2 accounts. One is fixed capital account, that is the capital account of all the partners which is going to remain fixed, and current account to adjust all the adjustments. Fluctuating capital, the capital keeps on varying from one period to another period. So that was all about the first chapter, that is your fundamental. So coming to the next chapter now, admission of a partner. So the first question is admission of a partner. So why does the admission of a partner is done? So basically it is done for the additional capital. Next we have is your sacrifice ratio. So the formula sacrifice ratio, that is old ratio minus the new ratio. Revaluation account. Revaluation account is also known as extension of your P&L account. Capitalization method. So this is one of the method of valuation of goodwill. Next, goodwill is the reputation of the business. Moving on to the third chapter, retirement and the death of a partner. So here also certain examples, certain match the followings will be definitely asked. Gain ratio formula will be new minus old. Executors account. So executors account is prepared at the time of death of partner. Simple. Next, goodwill valuation is done as per the accounting standard 26. That is accounting standard for intangible assets. Hidden goodwill, excess paid over the capital balance that has to be paid to the partner who is retiring. Executor. So who is an executor? He is a legal representative of the deceased partner. Next chapter will be the dissolution of partnership firm. Realization account. So realization account is prepared when? It is prepared at the time of dissolution. So dissolution of the firm, it is wherein all the partners cut off their connection with the firm that they have. Asset taken over by a partner will be coming on the credit side of realization account. Partner's loan account will be settled by the payment on the dissolution, right? Then PBD we have. So PBD, that is provision for bad debts, it will be always transferred to the credit side of realization account. Okay. Next, accounting for share capital. So from this chapter, so let's see which all are the important ones. Companies Act. So Companies Act was revised in the year 2013. Equity shares we have. So equity shares are nothing but owner's equity. Calls in arrears. So calls in arrears is unpaid call money. Share at premium. The share value will be collected more than the face value Buyback shares, the company is going to purchase its own shares from the open market or from the stock exchange. Yeah. Next, debentures and redemption of debentures, that is your chapter number 6. So debenture, the first question itself we have is debentures. So debenture is nothing but acknowledgement of debt. Bond, so bond is nothing but here it indicates your bond is going to indicate the borrowed capital. Coupon rate, so coupon rate is nothing but it is the interest on debenture. Over subscription, more application is received, then the capital that the company has. Under subscription, less application will be received than the capital that the company is going to have. Next, we are on the 7th chapter, that is financial statements of the company. Postulates, accounting postulates are nothing but these are the basic assumptions on which the accounting transactions of the business would be running. Next, we have is owner. Owner is nothing but he is going to be the internal user of the accounting information. Balance sheet, so balance sheet is one of the type of financial statements. Land and building is a tangible asset. Trade payables is current liability. Okay, coming on to the 8th chapter, analysis of financial statements. Tool for financial analysis, so basically it helps in critical evaluation of the financial statements. Comparative analysis we have, this is horizontal, common size is vertical, then lenders will be the economist we can tell. Financial statement analysis, this is going to use for the financial statement information or the analysis. So we are on the next chapter, that is ratio analysis. Current ratio, so current ratio is liquidity ratio because it is something very closely related to your liquidity of the firm. Then proprietary ratio is related to solvency ratio. Then your inventory turnover ratio, is activity ratio. Profitability ratio will be written on investment. Cost of revenue from operation, this is going to be revenue from operation minus the gross profit. Okay, yes, last chapter, we are on the last chapter, that is cash flow statement. So the first question itself is cash flow statement here. So cash flow statement, that is indirect method. Then operating activity, so operating activity, basically the operating activity that happens on day-to-day life of the business, right? So the answer can be this one, that is your the first one, cash received from sale of goods. Investing activity, interest received in cash. Financing activity will be the cash that is going to be received from shares. AS3, that is the cash flow has to be prepared with the help of the accounting standard 3. So thank you for watching this video, and this will definitely help. So now the question arises, ma'am, only if we study is it enough? So exactly for you, if I have to answer this question, definitely it will help, but exactly 100% we cannot promise that this itself is going to come, but definitely 90% these are the repeated match the followings that I have drawn from various question papers, preparatory papers, and the other resources also. So give more importance for this. Here and there the examples might be changed, but definitely this would be the repeated one. So once again, wishing you all the best. Have a very good preparation for your final exams. Stay tuned for your channels for more upcoming videos. Thank you.